Hi everyone. Welcome to Ava Talks Crypto. I'm Ava, and I'll be delivering all the latest and hottest news happening in the crypto space. For today's top stories, BlackRock's Bitcoin ETF application refiled and named Coinbase as surveillance sharing partner. Brokerage firm says chances of approval for spot Bitcoin EFT are fairly high. South Korea passes new crypto bill for user protection. Hong Kong sets up task force for Web3 development. Ripple Labs unlocks 1 billion XRP from escrow. Will XRP and TOADS reach $1 this year? For our first-time viewers, Ava Talks Crypto is a channel dedicated to providing all the latest news stories happening in the crypto world. We post daily news videos as well as daily market report videos to help traders and investors formulate sound strategies for the next trade in the crypto market. Before we begin, please support what we do by liking this video and subscribing to our channel. Doing these simple things goes a long way toward helping and encouraging us to produce quality content for you to enjoy. Don't forget to leave a comment to let us know what you think, and share our videos with your friends who may be interested in the crypto market. Be one of the first to watch our videos by hitting that bell icon to get notifications whenever we upload new videos. Now, let's discuss the headlines. Let's get started with this top crypto story. Last week, the SEC deemed earlier proposals for a spot Bitcoin ETF inadequate since they didn't specify the name of the underlying market in so-called surveillance sharing agreements. In response, Nasdaq refiled an application to list the BlackRock Bitcoin ETF. The Nasdaq exchange has refiled its application to list BlackRock's proposed Bitcoin ETF, joining rivals in naming Coinbase, as the market will be monitored under a surveillance sharing agreement. The U.S. securities regulator, the SEC, stated that the filings were inadequate without the name of the partner in the surveillance sharing agreements, which were supposed to guard against market manipulation. Other pending applications for Bitcoin ETFs included one of BlackRock's main rivals, Fidelity. They have also updated their application to name Coinbase as the partner for the surveillance sharing agreements. According to the reports, the sponsor of a Bitcoin trust must enter into a surveillance sharing agreement with a regulated market of significant size to secure approval from the SEC. Based on the new filing from Nasdaq, the exchange came to terms with Coinbase on a surveillance sharing agreement on June 8. At the moment, Coinbase has represented approximately 56% of dollar to Bitcoin trading on US-based platforms since the beginning of the year. The original filing by BlackRock dated June 15 called for a surveillance sharing agreement but didn't name which exchange would serve as the partner in the deal. However, this has since been fixed, and Coinbase was named as its partner. The money managers are hoping to succeed in launching a Bitcoin spot ETF, which the SEC has rejected for years. Moving right along, here is our next story. Brokerage firm Bernstein stated that the probability of US approval of a spot Bitcoin ETF is fairly high. A report stated that the lack of spot ETFs leads to the growth of over-the-counter products, such as the Grayscale Bitcoin Trust, which is more expensive, inefficient, and illiquid. Furthermore, the US SEC's stance on the spot Bitcoin ETF is a difficult one to hold. The probability of approval is high, according to Bernstein in a research report that was released on Monday. Bernstein noted that the SEC had already allowed futures-based Bitcoin ETFs but had yet to approve a spot Bitcoin ETF. The SEC also recently approved leverage-based futures ETFs on the premise that futures pricing comes from a regulated exchange, such as the CME. According to analysts, the SEC believes that a spot Bitcoin ETF would not be reliable because the spot exchanges, such as Coinbase, are not under its regulation. Therefore, spot prices are not reliable and can be prone to manipulation. However, BlackRock, along with other asset management firms, filed a new application for a spot Bitcoin ETF with the SEC. Included in the application is a surveillance sharing agreement, which will mitigate the SEC's concern about market manipulation. Analysts who are closely following the application for spot Bitcoin ETFs also stated that the court did not sound convinced that the futures price is not derived from the spot price. This means that allowing a futures-based ETF and not allowing spot trading sounds like a difficult pill to swallow for the courts. Furthermore, the industry also suggested a surveillance agreement between the spot exchange operator and a regulated exchange, such as Nasdaq. This new feature only strengthens the argument for having spot Bitcoin ETFs. Reports also say that the SEC would rather bring in a regulated Bitcoin ETF led by more mainstream Wall Street participants and with surveillance from existing regulated exchanges than have to deal with a grayscale OTC product filling the institutional gap. On a related note, here is another interesting crypto news. In Asia, the South Korean government passed a new crypto bill for user protection. This bill marks the country's first step towards a digital asset legal framework. South Korea's National Assembly recently passed the Virtual Asset User Protection Act on Friday. This marks a historic step for the country as it builds the first legal framework for virtual assets. The new law will take effect next year, and it comes from 19 proposals from lawmakers. The new legislation clearly defines digital assets and sets out penalties for unfair transactions. Service providers will be required to segregate user assets, have insurance, and hold some reserves in cold wallets. It also requires providers to maintain records of all transactions. When the new law comes into effect, it will give the Financial Services Commission authority to oversee and inspect service providers. The Bank of Korea will have the right to request data from service providers. Virtual assets have come under heavy scrutiny in South Korea following an investigation into a domestic lawmaker's crypto holdings. The failure of Terraform Labs last year also led to the creation of the law. Up next, we turn our attention to a developing story. In Hong Kong, the city is aiming to become a Web3 hub. Recently, the Hong Kong government established a task force to promote Web3 development. The task force is chaired by Financial Secretary Paul Chan, and it comprises 15 non-official members from key government officials and relevant sectors. Financial regulators will also participate in the task force. Animoca Brands chairman Yat Siu announced that he will also be joining the task force. According to Chan, the blockchain technology that underpins crypto is secure, transparent, low cost, and has the potential to solve many difficult problems in finance, trade, and business operations. The Hong Kong government is said to be allocating $6.4 million in February next year to develop its Web3 ecosystem. The government also announced its plan to set up the Web3 task force by then. Now, we'll bring you an exclusive report on an issue that's been gaining great attention. Ripple Labs has released a total of 1 billion XRP from escrow. The release was made in a wave of 3 transactions, where the first transaction occurred at midnight with a total of 300 million XRP tokens unlocked. The XRP release from escrow is a huge strategic business move from the company designed to help cushion the liquidity of the crypto in circulation. The locking of XRP in escrow accounts dates back to 2017, with a defined approach to release the token gradually every month to prevent devaluing the digital currency. In line with the strategy, a total of 1 billion tokens were designed to be released every month over a 55-month period. The recent escrow release appears to be taking a minimal toll on the price of the XRP token. At the time of the report, the XRP was changing hands at a price of $0.4819, which is down by 0.12% over the past 24 hours. While many are seeing the XRP release as a problem as it devalues the digital currency, some are taking advantage of the release and are stacking up more of the asset ahead of the verdict on the SEC lawsuit against Ripple Labs. To wrap things up, XRP and TOADS may reach $1 this year. TOADS is one of the most ambitious DeFi companies to date. It was successful in fueling an ecosystem that has already generated a staggering 370% return for its early investors and has raised $5.7 million recently. TOADS' native TOADS token is already paving its way to become a leading cryptocurrency in the market. It was successful in showcasing its versatility as a meme coin that generates passive income. According to market experts, TOADS is poised for significant growth this year. Many are predicting that the token will be able to break through the $1 mark this year. The XRP bulls are also making big moves ahead of the verdict in the SEC versus Ripple Labs case. Ripple remains undeterred by the challenges of the legal battle with the SEC, and it has recently launched a new platform that could speed up the rate of adoption for XRP. Experts believe that if Ripple Labs gets a favorable verdict from the SEC lawsuit, it could potentially propel XRP beyond $1. Some are even suggesting that XRP could reach double digits towards the end of 2023 or the beginning of 2024 at the latest. TOADS and Ripple Labs are expected to reach new highs this year as the bulls for TOADS and XRP are building incredible momentum. These are the latest news stories we have for you today. Again, this is Ava from Ava Talks Crypto. Thank you for watching, and have a great day.